good morning, everybody. How y'all doing? How y'all doing? How y'all doing? What's going on? Welcome. Far too kind. Could have been anywhere in the world, but you choose to be here with me, humble old me, on this Wednesday morning. Yes, on this Wednesday morning, July 31st, 2024, the last day of the month, the last day of the month of July is where we are. Is where we are. Yes. Okay. Put the mic a little closer to me today so I ain't gotta talk as loud. I don't have to talk as loud this morning. I don't feel like talking loud this morning. All right, let's get to it, man. Good morning, everybody. Tighten up on my camera, though. Get my camera together. If by some slim chance of my overactive imagination you don't know who I am and this is your first time tuning into Tim's Tidbits, allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. Give you a nice hearty thank you for always tuning into Tim's Tidbits. It helps the community grow, and we're trying to reach as many people as possible to help them understand how to read price action, how price actually moves, so that you can make educated decisions on your trade entries and trade exits. You're not just guessing, you're not just gambling. You have an educated foundation to back up your strategy. You got an educated foundation to support your entry and your exit. You're not just gambling at should I get in here? Should I get in there? Should I put my stop here? Should I put my stop there? If I put my stop here, am I in trouble? You don't have to guess at that stuff. And we're here to help you understand how to read price action. Yes, it's all done through the ICT concepts. If you have issues with that, I'm sorry. It works for me. It may not work for you. You may not like it. You may have heard all these horrible things on the internet about how people are scammers, and it's a lot of scammers on Algo's internet. But we are here for you. When I say we, I say me and the gang. We're here for you. We're like a support group for traders. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spada. If you don't hablo Espanol. And this is another episode of the Overnight Price Action Review. Good morning, man. How y'all doing, man? What's up? Here to learn and share. Good morning to you. The birds are chirping. Tweet. Good morning, Deborah. How art thou? Good morning, Tish. Good morning, Sonia. Good morning, Iraq. Good morning, Seawalk. Good morning, Thomas. Good morning, Scorpion. Wait a minute. I don't know that name. Carino. Good morning, Carino. Good morning, Rhonda Green. You like it too, Carino? I like it too. Good morning, Call Me True. What's going on, Fishbone the Great? Fishbone the Great. Haven't seen you in the month of Sundays. What's happening? Now, let's get right into it. We had us a trend night to the upside last night. Boom, 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 boom. Nah, had us a trend night to the upside last night. Right. When I woke up, good morning, Lil Hawk. When I woke up this morning with my mind, you know it was steady on Jesus. When I woke up this morning, I noticed that we was just having a trend day to the upside. It was just running, running, running. And if the market was to open right now, where it is, we would have a humongous gap. We would have a gap. I think they go up to, is it the 415 candle or is the 4 o'clock candle? Let's see. I put it at the 415 candle. I can't remember if it's the 415 candle or the 4 o'clock candle. So this is 415. That's when that candle opened. So I can't remember if they do it off the 4 o'clock candle or the 415 candle closure. So I'm just gonna go with the 4 o'clock candle closure. That's the 415 candle closure. Right. I'll put a line there. All right. And then we're gonna slide this over here like this. All right. And put on regular trading hours. Yeah. There you go. So it's the 4 o'clock candle closure. All right. So the 4 o'clock candle closure, it would be a gap that big. If price was to open right now, it would be a gap that big right there from top to bottom. All right. So that's a huge gap for the ES. That is, what's that there? What's that there? Roughly 100. What's that? Man, did I say 103? Man, 103 for the ES? That can't be right. That can't be right. Yeah. Yeah, for the ES, 103. Golly, because it's right now, it's up 74 points. It's up 74 points. So wow. 100-point gap. That's a lot of movement for the ES. Yes. 100-point gap on the ES. That's amazing. We have done a lot of moving. Yeah. The tools don't. I thought I was tripping for a second. I thought I was looking at the NQ for a minute. Whoa. Let's look at the NQ. NQ went crazy. Golly. NQ, man, the NQ up 430 points right now. Just overnight. Pushing up toward that daily fair value gap. Remember that daily SIBI that we was talking about on the ES and the NQ? We're in it on the ES. All right, so let's go to the 1 day. Okay, so looking at the ES, all right, we tapped it on the ES back on Monday. So on Monday, we touched it on the ES. All right. So on Monday, we touched it on the ES. So for the ES, we already touched that on the ES. So we created it and we went back and touched it. So for the ES, I'm looking for the reaction off of, right, this. We got this mitigation block here. We got this bearish mitigation block there. We got this bearish order block there, right? So I'll be looking for the reaction on the ES to the bearish order block because we already touched the fair value gap. So I'll be looking for the daily reaction off the bearish order block. And we got a volume imbalance up there too. Okay. With the NQ, we haven't touched. So we got bearish divergence right now between the NQ and the ES as in reference to coming to this PD array right there, right? So we touched the PD array already on the ES. We didn't touch it on the NQ, bearish divergence, right? We're digging into the PD array on the ES, right? We still haven't touched it on the NQ, bearish divergence, okay? So for the NQ, I'm looking for the reaction from the SIBI, right? The ES, looking for the reaction from the order block or the mitigation block. If you watch mitigation blocks, you can watch that too. But from the order block right there, watching the reaction for the ES on the daily time frame off the order block, right? And then once we see the reaction off the order block, we're looking to see if, hey, class participation time. Let's see who's in the chat. Who am I gonna call? We got Here Learn to Share. We got Deborah. We got Tish. We got Sonia. We got E-Rock. We got Seawalk. We got Thomas. We got Scorpion. We got Rhonda. We got Call Me True. We got Lil Hawk. We got Kim. You know what? The females always be representing with the pull up in the hard hitting answers. So now I'm gonna call on a dude, a male. I'm calling on a male. So we got Seawalk, Thomas, Lil Hawk. I can't remember if Scorpion was a female or a male. Scorpion be in the back of class, but the ones I know. So we gonna call on Thomas. What do we have? Oh, and we got Avery over there in the Discord, right? We got Avery in the Discord. Thomas, I'm calling on you. Now that we are watching this order block, right? We already touched the fair value gap and we said, okay, we want to see the reaction off the order block, right? Once we get the reaction off the order block, what are we watching on a daily time frame? What are we watching for in reference to this SIBI? What do we want to see in reference to this SIBI? We want to see if price does what, right? We want to see if price does what in reference to that SIBI. Thomas, now everybody don't go dropping your answers in the chat. Thomas, what do we expect to see in reference to that SIBI? What do we want to see price do? What do we want to see if price does what in reference to this SIBI right here? Respect it, but what do we not just respect it? What do we want to see it do? Right? Price is bearish. What do we want to see this SIBI do? We want this SIBI to create what? Not just respect it. We want it to see it create what? Because this is respecting it here, right? We're not just blasting through it. But what do we want to see that SIBI do? Respected. Yeah, that's partial credit. I have a question. Okay, wait a minute. Ask your question right there. What do we want to see that Sibby do? Right. Let me give you. I'm gonna give you a clue. I'm gonna give you some help. Since this is my first time calling you on the big stage, right? Avery, stop typing answers in the Discord chat. Yes, we want to see that too, but what do we want to see it do? Right? Remember when I be drawing the lines right there? We'd be like, we want to see this Sibby create what? Look at, we want to see that Sibby create what? What's up? What's up? Where's J Rock? Right? Okay, I put it to you like this. What do we look for to confirm displace? Okay, see that display. I was about to say that. What confirms displacement? What lets us know that displacement is really there? Right? What lets us know that displacement is really there? We want to see that Sibby create what? What lets us know that displacement is there? Right? You hitting all the you hitting all the yes, reject the gap Kashaya, right? You hitting all the right things. Another Sibby. There you go. You feel me? Right? So you got all the key ingredients, but you always want to have them nuances, right? Because respecting it, right? Because respecting it right there, that's respecting it. Consolidating up under there, that's respecting it because we're not pushing through, right? Okay. If we push up and reject off of it and just come here, but we don't create a Sibby, that's respecting, that's rejecting. But if we push off and create another Sibby, that's letting you know that price that the institutional sponsorship is still interested in going that direction, right? How far down will it go, right? You just start to look at lows, right? How far down can it go? You start to look at the lows, you know what I'm saying? And then when you get to an area, right? Because right now, right, we price has shown you we're on the sell side of a market maker sell model, right? And then every time you pass a low, right, you're anticipating some kind of retracement back up, right, to reclaim order blocks. Okay. And then at some point, the higher time frame is going to kick in and be like, okay, this is all the far down I need to go, right? I've come down to the fair value gap that I was trying to get to. I've come down to the order block that I was trying to get to, right? I've come down to the low that I was trying to get to, right? And now I'm ready to go back up, right? So we just watch for the key signs on the lower time frame to let us know, okay, I just passed the low, right? Where is that low in relation? No, I don't want to close, right? Where is this low right there in relations to the weekly time frame? Okay, in relation to the weekly time frame, all right, that's a breaking market structure on the weekly. Okay, that low right there for the weekly, that's a breaking market structure for the weekly. Okay, that's bearish. Now that we've come down and now we're retracing back up, right? We don't have an imbalance on the weekly time frame, right? We don't have imbalance on the weekly time frame. So what can we be watching on the weekly time frame? What can we expect price to come back to on the weekly time frame? Right? You go in and you do your due diligence on the weekly time frame. You say, okay, we've come down, we've created, right? We're pushing through this right here, this candle right here, right? Push through these down close candles there, So we have an official change in the state delivery for the whole um order block there, right? We had an early sign of a change in state delivery there when this candle got engulfed here. After this was the last candle to take out the high, got engulfed. We got a inversion fair value gap right there. That's another type of change in the state delivery right there, right? We had inversion fair value gap that we went back up to, right? And respected this week here, right? We pushed back up into that first change in the state delivery right there and respected it, right? So now we're coming down. We can look at, all right, we got consequent encroachment of this wick that we can possibly, excuse me, possibly trade back up to if it gets overzealous, right? But we don't have anything recent or new outside of the fact that we traded down past the last up close candle of this order block. So that's the strongest thing. So this up close candle, that consequent encroachment of that wick, those are the strongest areas right now on the weekly of anticipated resistance, right? Because we already traded back up and respected the inversion fair value gap right there, right? So you go back to the daily and look to see, hey, what do those line up to, right? On the daily time frame, right? It puts us inside this order block, right? For the weekly, that daily order block, right? For the ES, that volume imbalance for the ES, all of that is up there in close proximity of that consequent encroachment of that wick, right? So you're looking for, like we said, we already touched the fair value gap, and we was looking for the reaction at the order block, right? So that's confluence, is lining up, right? And then when you look at the order block for the weekly, right, it lines up with this huge order block right here on the daily, right? This huge order block right there on the daily, okay? And then if we look at that mean threshold of that from body to body, right? Go from body to body, right? Mean threshold of that, it's in close proximity of the mean threshold, of the consequent encroachment of that wick. Okay, so we got like a lot of confluence in this area right there to support this bearish thesis on the daily. So boom, once you get there, you look for the reaction and see if it creates a new SIBI over time. You know what I'm saying? Create a new SIBI to keep up the bearishness, right? And if this fails, right, we're looking to see if it becomes an inversion fair value gap and it supports price because the higher time frame has taken over and said, hey, that's all the far down I need to go, right? That's all the far down I need to go. Okay, because right now we got a break in market structure, but we still don't have a SIBI over here. We got an immediate rebalance, which is a strong sign of bearishness, right? Go up there, get an immediate rebalance. That's a strong sign for the bearish case, right? But we're also trading into a bullish fair value gap that we're still respecting. So the weekly could say, hey, that's all the low I need to go. I'm going back for the high now, right? So we just watch for the clues as price plays out, right? We watch for the clues as price plays out. And right now, the weekly has broken bearish. So we're sticking with the bearish thesis until proven wrong, right? Sticking with the bearish thesis until proven wrong. And on the daily, it's still bearish, right? And we stick with the bearish thesis until proven wrong, right? So that's why we're looking for that bearish reaction off of that. All right. Where's your question? You say touch me in, T. I told you to ask your question. Where's the question? You never asked the question. All right. Change of delivery. What about change of delivery? What's up, Long? What about change of delivery? What about change of delivery? It's almost time for the market to open. So let me go ahead and get to it. Would you consider a closure above 5534.5 a change in market structure? On the daily, you say 5534. You say 5534. Let's do it like this. You said 5534.5. No, not on the daily. That's not a no, that's not a change in market structure on the daily. Right? For the daily, you wouldn't start getting into like you wouldn't start getting into a breaking market structure until you took out this weekly high right here. This weekly high at 56.2975 would be a breaking market structure on the daily, right? Because that high right there at 56.2975, it came down and took out the low, right? This high came down and took out the low right here, right? So if we trade back above that high, then that's a bullish breaking market structure on the daily, right? That's a bullish breaking market structure on the daily right there, right? Because we will be trading from external liquidity, which we come from here down through external liquidity. All right. Let me take all my stuff off the chart for a second. All right. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so you can go back and study what you saw today, then apply it to your future trading endeavors. Enjoy your day. Goodbye. So, right, we're looking at this high right here. Okay, that high right there came down, right, and took out these levels of liquidity there, right? So for this price move right there, right, for this price move, that low and that low is all external liquidity, right? It's all external liquidity down here. Okay, so we came from here, we took out external liquidity there, then we moved back to internal liquidity there, then we came down to external liquidity there, and now we're moving back to internal liquidity here, right? If we take out that high, then that's moving from external liquidity back to external liquidity. And when you go from liquidity to liquidity, that's a sign of a reversal, right? So that's your breaking market structure right there, right? Because you're going outside of the range of this price leg right there, right? Because price in a trending market moves from external, right, liquidity to internal liquidity, right? Let me go back here, right? So we come from external liquidity to internal liquidity to external liquidity to internal liquidity to external liquidity to internal liquidity in a trending market, right? That's for a trending market. Hopefully that helped. Wells J Rock. Can you briefly go over order blocks? Still having trouble with them. Okay. All right. It's two different ways you can spy an order block Kashaya. It's two different ways you can spy an order block. The first way to spy an order block is, first of all, you're following the money in both ways, right? So the first way to spy an order block, right, is, okay, this right here is our, right, this right here is our area of, we expect something to happen here, because at this point right here, right, at this point right here, right, we're expecting something to happen because price is consolidating, right? And we got buy side and we got sell side there. So one way of spying a order block is, right, price is in consolidation. Okay, let me make these candles big because people that be watching on their devices be like, Tim, you got the candles way too small, pimping. You're looking at these what are these 20 something 29-inch curve monitors? I don't know. They big enough for me to see, and I got bad eyes. I'm old. Okay, so price is in a consolidation. Okay, and then price displaces away with institutional sponsorship, displacement, heavy move. Okay, so once we get that heavy moving, how do you identify the displacement? Because when it leaves this area of consolidation, it's leaving imbalance, right? You don't need multiple like this, but we got multiple imbalances here, right? It's leaving it imbalance. So when you get the consolidation and that expansion away with an imbalance, right, that's displacement, right? And so where you find the order block out of this, in this case, would be the last, right, down close candle. This is a little doji, so that's why I'm the last beefy down close candle at or near equilibrium of this area of consolidation, right? That's your bullish order block in this case. And if the narrative has not changed when price trades back down to this order block, you anticipate it to support price if the narrative has not changed, right? But if the narrative has changed, right? What do you mean, Tim? Right? We're coming up here, and then we got a bearish break in market structure right there, right? Because that low there came up and took out a high, right? And then we traded back down through that low. So we went from external to external liquidity, right? That's anticipating a reversal, right? So now the narrative has changed. So when we come back to this order block, we anticipated to just be a speed bump, right? And as you see, it gave us a reaction, right? But it just pushed us back to that imbalance, and then we cut through it, right? So it was just a speed bump because the narrative had changed. If the narrative hadn't changed, we would expect price to come back to it and then push up higher, right? That's one way to find an order block. Consolidation, displacement away at or near equilibrium of the last beefy down close or up close candle in reverse. If you're looking at it in reverse, come here. Boom. There you go, like that. All right. So you circle it there. right? There. See, consolidation, take off. It would just be the last up close candle instead of a down close candle, but that's how it looks for the bearish side, right? I know it's a red candle, but just imagine that it is, since it's like this, you can see that that's a up close candle in this case. Okay, so consolidation, heavy movement away. There's the last up close candle. Now, for the other way, the main way of finding the, well, I call it the main way, but the other way of finding the order block, right, is you come to an area of anticipated support or resistance. In this case, right, this is anticipated area of resistance. Why? It's an all-time high, and we don't know how high it's gonna go. Right, so we're above all-time highs. We don't know how high it's gonna go, right? And then we get up here to this area, right? We get up here to this area of an all-time high, and we have a shift in sentiment, right? Mean we start going the other direction. Okay, and this is for a reversal of what this is for. Yeah, a reversal order block, meaning we were bullish and now we're going into a bearish, looking for a bearish order block. So go up, we have the shift in sentiment, and we close below, right? We ain't got to close, just trade below, right? The series or the last or the series of up close candles, right? And so here is your bearish order block right there. So we came to an area of anticipated resistance, right? Heavy contrarian um delivery, right? Heavy contrarian delivery, meaning we were going up and now we met with heavy contrarian delivery, right? There you go. Heavy contrarian delivery, right? Imbalances showing institutional sponsorship, trade past the series of up close candles. There's your bearish order block. Okay. Right. And so, and in the case of a continuation order block, it's the same thing, right? It's the same thing, except for instead of immediately reversing, right? Instead of immediately reversing, okay, we come up to an area of anticipated support or resistance, right? We're coming up to that area. This is our anticipatory reactionary point. We have a shift in sentiment, meaning we was going bullish, then we started moving bearish, and then we trade back above, right? Back above the series of, right here we coming up, trade back above, right, the series of what we got, our shift in sentiment right there, right? Once we get back above it, here is our bullish order block right there, because price was coming up, right? That's our apex. Then we got the shift in sentiment, right? And then we traded back above where we got the shift in sentiment at right here. And there's your bullish order block. That's for in continuations, right? So with the continuation, you're going to get the shift in sentiment, and then we're going to trade back above it, right? It don't have to be like a huge pullback like this, right? It don't got to be a huge pullback like that. All it got to be is you're going up, you go down, and then you go up with displacement, right? And there's your order block inside there, right? When it's a reversal order block, you go up and then you go down. There's your order block right there. And it's just the reverse for what's the name? Hopefully that helped. At mean threshold. I'm sorry, Carino. I do not know what you are talking about. These questions are too vague for me. I don't know what you are talking about. Here, do this right here. I'm going to put a link in the chat and you can pull up and speak your question because I am totally confused at what you're talking about. All right. Let's hopefully that helped, Kashaya. Let's go into the overnight price action. You're welcome. All right. Coach. Oh, change of character. Okay. Yeah. Yeah. Practice, practice, practice. Yeah, change of character. Change of character is I think some people call change of character a break in market structure, change of character. I think I've heard of change of character, but I don't use that term. So I just use breaking market structure and I use changing the state of delivery. Those the terms that I use. I don't use change of character, so I really don't know exactly what I don't know exactly which one it is, but you know, I've heard people use it, so I don't know how to use it properly. All right, so we opened up here. That's not at 54, 54.75 even. All right, and nothing can stop me. We all the way up. So it was a trend day to the upside, man. It ain't much to talk about here because it was just a trend. It was a trend night to the upside. We created a Bessie right here at the 6 o'clock candle that we never traded back down into. We pushed up and created two Bessies, one here at the 7 o'clock candle, and we did touch that one, right? So we did touch, we pulled back, we got an institutional order flow entry drill on the 715 SIBI, right? We got an institutional order flow entry drill on the 715 SIBI, and then we created Bessie. I keep saying SIBI, Bessie, and then we created another Bessie on the 830 candle, and we traded back down into it, another institutional order flow entry drill. This time we actually got back down into the wick of the order block right there. Oh, there's one right there. There's one right there. I was just talking about that. Shall you see here? All right, we come up, right? We're here. We're at this area of consolidation right there. And then we push up, right? We're coming into an anticipatory reactionary point right there. We're trading up into the wick of this candle there, going up toward this high, right? And when we get there inside that wick, look like we got there pretty close to consequent encroachment, right? We got pretty close to consequent encroachment there, right? Then we had a shift in sentiment, right? Had a shift in sentiment there with that down close candle. Then we traded back above that down close candle right there. Boop, there's your order block there, right? We retraced back down, touched the fair value gap, pushed back up, came back down, touched the wick of the order block, right? When the order block is overlapping with the fair value gap, you're looking for a price to be sensitive in the wick, right? Touch the wick of the order block, boop, displaced away, right? Heavy displacement away. There's a perfect example right there. Okay. Now, then we displaced away, right? We took out the 345 high. That's time-based liquidity, right? We've taken out time-based liquidity right here, and we hit that at 10:15. So during the Asian session, we took out time-based liquidity, meaning we took out a area of liquidity from a prior session, right? Prior session, prior day, prior, you know what I'm saying? That's time-based liquidity. Okay. And then we consolidated there for a little while, right there at that high. Okay, traded back down into the 1015 BISI that was created. So this BISI right there was at a break-in market structure, right? That BISI was at a break-in market structure. So since this BISI is at a break-in market structure, right, you anticipate that to be a very strong BISI. You don't want to see that fail, right? And it did not fail. We kind of worked it a little bit for 1, 2, 3, 4, 5, 6, 7 15-minute candles. All right, we pushed away, came back down. So for about 7 15-minute candles, we worked that area, and then, well, we touched it, and then we displaced away again. Okay, displaced away again, taking out that high that was created right there on the 12 a.m. counter when we pushed up, then traded back down to it once again, right? We created a swing high there, and we took that out with displacement, right? We took that out with displacement. So now we have a 130 BISI, okay? And then we traded back down into that 130 BISI on this 2 o'clock candle, and then we worked our way up, work, right? Kind of worked our way up, taking out looked like yesterday's high. I don't have everything marked on there right now. So yes, took out yesterday's high there on the 430 candle, hit it, wicked off of it, traded back down into this down close candle, respecting the down close candle, showing that we did not create any type of BISI off of this, but we come back down and we're respecting this down close candle, showing that the buy program is still intact, right? Different clues for, is the program still intact, right? Okay, we hit that high, we're not displacing through, right? But we're still respecting the down close candle. So okay, the buy program is still intact. All right. And then we come here, and here on the 815 candle, we take off, right? Displacing away, creating a BISI right there. And then here on this 930 candle, we came down and inverted that BISI right there. Okay. So looking to see, has the bullishness run its course? We are extremely extended. We are way up here in a premium, right? We're up in a premium. So right now, we're starting to show weakness. We have traded back down through this last up close candle that's taking out highs, right? We've inverted this fair value gap. That's bearish, right? We're showing bearish clues, right? Right now, we're still, right? We've come down and we're still respecting that BISI, right? So we got that BISI. We're still respecting that BISI right there. Okay. If that BISI fails, right? Right now we're looking to see, does this inversion fair value gap keep price down? Right? Does it keep price down? Right? Let's go to a higher time frame to see what's going on. On the higher time frame, right? All we're doing is retracing back down into this down close candle, right? So for the hourly time frame, this down close candle is doing its job. This down close candle has not failed, right? All right, this down close candle has not failed. Okay, so price on the hourly time frame is still bullish, right? Until we start pushing through this down close candle, right? If we push through this down close candle, right, then we could have a possible change in state delivery on the hourly here, but the hourly is not there yet, right? So on the 15-minute, right, that's why we're watching to see if this inversion fair value gap keeps price down, right? Looking at this inversion fair value gap, see if it keeps price down. Looking at this right here, this change in state of delivery, looking if it keeps price down, because the 15-minute is starting to show weakness, right? But the hourly isn't there yet. So we're just looking to see if this weakness plays out. We want extra confirmation. We're not just going to jump in and sell that inversion fair value gap. We're not just going to jump in and sell that change in state of delivery. We're looking for the extra confirmation because the hourly isn't there yet. If the hourly had already given us a change in the state of delivery, right? If it already gave us the change in state of delivery, if it already started disrespecting the up close, the down close candles, then it would give more strength to the 15-minute. But right now, since the 15-minute is just getting there, you want to wait for that extra confirmation before you just jump in selling, right? Because yes, we're an extreme premium, but we don't want to try to pick the top. We want to let the market form the top and then just get our little piece off of that over there, right? And then what I be looking for, y'all already know how I do, right? Right. If we zoom out and look at this right here as a possible market maker sell model, right? I am not looking to get involved until after we trade below here, right? I'm not looking to get involved on a smart money reversal. I'm not looking to get involved on a low risk short, right? I'm looking to get involved once we get this. I'm looking to get involved here on the area. Once we break below the last area of accumulation, right? I'm looking to get involved off this breaker and imbalance over here somewhere. All right. If that pans out to be the top right there. That's how I get involved with the market maker sell models. But we should wait macro at 950. Witness, because it's a 950 macro. Still lost. I'm still. Hey man, that's all I got. Do anybody got anything for me? I'm getting ready to get out of here. Remember today, I think we had a lot of news today. We got like a lot of news today. I know this afternoon is FOMC, Fed rate announcement. Okay, so we had 8:15, we had ADP reports. Treasury announcement. 9:45, we had Chicago PMI. Right at 10 o'clock, we got pending home sales, and then at 2 and 2:30 is the big dog. Right, 2 and 2:30 is the big dog. So we got PMI coming up in like 4 minutes. We had, pending home sales coming up in like 4 minutes. We had Chicago PMI at 9:45, and we got the big dog, the FMC, the Fed rate announcement at 2, and then the conference at 2:30. Right, that's typically a volatile situation, just like how CPI is a volatile situation. GDP be volatile on the first one most time. You know, we got certain ones that's the hard hittings. All right, man. I don't. Okay. So if it decides to take out the high instead of continuing to trend bullish, you just won't get in, right? It depends on what the lower time frame is giving me, right? It depends on what the lower time frame is giving me. Like if we right, what is that? Was that an ant? What was that? So everything is based off of what price is giving me, right? So let's go. Let me go back here. Okay. All right. Let's go back here. All right, we'll go back here. Okay. And we're in extreme premium, right? We're in extreme premium here. Okay. And we just tap that high right there, right? We just tap that high right there. We're in extreme premium. Okay. So since we're in a premium, don't really want to try to get involved in buying, going long, because we're in extreme premium. I like to sell in the premium. Okay. So if price isn't showing me any willingness to go down, right, then I look to the left and see what's going on. And then I see, okay, we got sell side delivery, right? We got a little buy side, sell side, buy side, sell side, buy side. Then we leave this area, right? We leave that area. So now I'm looking at all of this down here, right, as a balanced price range right there. Okay. Looking at all of that right there as a balanced price range. Okay. And then, right, so now I'm looking at all this as a balanced price range. So then I'm like, okay, I got sell side delivery here, right? I got buy side delivery there, right? Looking at the bodies of the candles, right? Right. So I got sell side, buy side over there, right? And then we left that area there, right? So looking at all of this right here as a balanced price range now. Okay. So now we're in extreme premium, but now I see the algorithm that can look at all of this right here as a balanced price range that it doesn't want to return to right now. Right. Okay. So now I got that in my brain. So now that I got that in my brain, now I'm going to look at my entry time frame, because now my structure time frame, which is my 15-minute, my structure time frame is showing me, okay, this right here is a balanced price range. So now I want to focus on this range here, right? I want to focus on this range right here from that high to that low there, right? I want to focus on this range to see, right, what price is going to give me as far as a setup. All right, let's make this orange. All right, I'm looking at that range there to look for something as far as giving me a setup. Right, so on my entry time frame, right, here we are on my entry time frame now. Okay, and so now I see on my entry time frame there now, I've already missed a possible setup there because we consolidated here. We consolidated here, displaced away, right, and traded back down, right, traded back down into the area of consolidation right there, right, and then we pushed up and we had imbalances, right, the bodies of the candles respected the imbalances. So I've missed a possible entry there, right? Price has shown me bullishness there, so now I've missed a possible entry there. So now we displace away again, right? We take off again there. Now we have a fair value gap here as a possible entry. We got an order block there as a possible entry right there, right? We got a mitigation block here as a possible entry. Okay. Price never comes back to any of them. Don't come back to any of them. We come back to that fair value gap there. We're not coming back to any of that. Extremely bullish. There you go. Now we just stung back in right there. Right. We stung back into the high of this on that news candle, stung back right there into the high of that fair value gap. So if you was waiting at this fair value gap, You probably got missed. If you was at that fair value gap, you got picked up. Right. So this fair value gap, you got missed. That fair value gap, you got picked up. Let's keep going. Yep. And then it never comes back down. Yep. So there you go. It never came back down into this fair value gap. So if you was at the bottom fair value gap or the mitigation block, you didn't get picked up. The top fair value gap, you would have got picked up. But that's just the way that I do it. I let price show me that, yeah, I do want to keep going up. Right. I do want, if it don't break down, you know what I'm saying? If it doesn't break down, then I say, hey, I look and see, say, hey, it does want to keep going up. And then like, here we go here. See this inversion fair value gap did not keep price down. Right. The inversion fair value gap did not keep price down. So I'm talking about here on the hourly, right? All we did was come back down to this down close candle, right? And that down close candle has not failed, right? The only thing we did here was get an immediate rebalance of this because you had a possibility to create a BISI this big, right? But we came down to the down close candle and pushed back up. So now there it is there. That candle, that inversion fair value gap did not keep price down, right? And then we traded back up through that 15-minute change of state delivery. I would say you don't want to try to pick the top. You want to let price form the top, right? Because the higher time frame was not saying I'm the higher time frame was not saying that I'm reversing. Right? You only want to trade on your lower time frames when the lower time frames align with the higher time frames. If they don't align with the higher time frames, wait until they align with the higher time frames and then trade off of that. Right. So again, to be clear, when I said if it decides to take out the high instead of continuing to trend bearish, you just want, yeah, it's not that I won't get in. I'll wait for price to show me, yeah, that I want to keep going higher, and then I'll participate until it shows me that, okay, now I'm ready to break lower. Right. But since I'm not hard pressed to like trade this morning, since I'm not hard pressed to trade this morning, and we're way up here in a premium this morning, yeah, I probably just won't participate because we're in a super duper premium. And I know we got FOMC later. And I know a lot of times price just bust people in the head the morning before FOMC. So it's like I ain't gonna mess with it. Right? I ain't gonna mess with it. We too extended. We got big news this afternoon. I'm not gonna be somebody else's liquidity. Right. But on a normal day, if we wasn't getting ready to go into big news, then I would just do what I said. Wait for it to show me that it want to keep going up and then participate. Right. Because remember, right, all of this right here, the market can look at it as a balanced price range. And what can we do with a balanced price range? Use it as support or cut through it like butter. Right. So we're in the extreme premium. Right. And we're coming up to a daily order block. The NQ is coming up to a daily fair value gap, right? We got this little consolidated area there. Price could very well get up here and then just cut through that area like butter, right? Cut through this area like butter. Okay, when we look at it on the daily time frame, see, it's just like a little consolidation area. We're coming back up here into this mitigation block, into this order block, right? Price could easily manipulate up with the FOMC, come back up to this volume imbalance, or come back up to this order block, and then slice through this like butter. You see what I'm saying? Because it's in a bearish trend right now. We've broken bearish on the daily. We've broken bearish on the weekly, right? But since the monthly is still bullish, right? Since the monthly is still bullish, all right, we could easily, the monthly could say, nah, I'm in control. Forget what the weekly say with this little breaking market structure right there. Forget what the daily say. You know what I'm saying? With a breaking market structure, I'm pushing back to the high. I'm going to push back to the high. And then once I push to the high, then I'll give you a break, which is unlikely to me, right? Which is unlikely to me, but who cares what I think? Mark can do what it want to do, right? But and the reason why I say it's unlikely to me is because you know, we've been kind of going, and so the market needs a little cool off so that it can finish the year strong. Finish off this election year strong. The market, the stock market is strong. It's ending high during the election season. Let it give a little cool off so it can end the year strong. That's my conspiracy theory on the market. They ain't got nothing to do with IPTA or what's the name? Because you know it's all manipulated. So they're gonna push the market where they want the market to go anyway. You're welcome, Kashaya. Anywho, that's it, man. That's all I got. Is 10:10. And the 10 o'clock news gave us a little boost. Right? Yep. We've moved on up. We moved on up and taken out that high. So that inversion fair value gap did not hold price down. We moved on up and took out that high. Right. So now the only thing is now the cycle just repeats. Right. So instead of looking for it to break bearish for coming below this area, right? Now you would just be looking for if it broke bearish for coming below this area. Okay. That's it. You just it's the same thing. You just keep it up. Just don't try to pick the top of the curve on the market maker sell model. Right? Whenever price goes up, right? It goes up and it gives you an area of accumulation. It move up, give you area accumulation, and move up, give you area accumulation, and move up, give you area accumulation, move up, whatever. You know what I'm saying? Don't try to pick the top. Just let it show you what the top is. Like that. All right, man. I appreciate y'all for hanging out with me. That's all I got. Remember, if you're going to trade, please trade safe. If you're not going to trade, please take a copious amounts of notes so that you can study what you saw today and apply it to your future trading endeavors. Till next time I decide to get on Algo's internet and share my thoughts on this thing they call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That big spider for those that don't hablo Espanol. Y'all be safe out in these trading streets, man. Gone.